what's next? And that's where I want you to opine on for us now. What's next? Right?
Well,
we had this move, and now what?
I candidly, for my travel trust, looking for stuff to buy. We raised a lot of money because we thought it was going to come down because there is no V. But you get these moves right now. It's a big S&P move like you had yesterday, and they're throwing away some really good stocks along with throwing away some really bad stocks. It is absolutely true. I mean, I've been using the figure 11 trillion good, about 17 trillion bad. So, I mean, you may think, well, hold on, why? I don't want to be in a market where the 17 trillion bad, but I'm looking at Microsoft, okay? And I've been saying, if Microsoft were to come down, well, now it's just pouring down. I can't back away and say I can't touch Microsoft. I think it's intriguing because it's a total winner in this environment. And it's a great balance sheet. It's got a control of its own destiny. Boy, I'll tell you, its web service is doing really good. Not as good as Amazon, but you heard Tepper liked Amazon. But I know I'd love to hear from the panel because I'm sure everyone on the panel realizes that everything is being thrown away all at once, and some shouldn't be. And it's our job to find the some that shouldn't be and skip the others, which are myriad and frankly, very dangerous.
Okay, so, Steph, that's where I'm going to bring you in right there. What do you say to Jim's analysis and his questions?
I think he's spot on. There are winners and there are losers. Sometimes, though, the losers, the ones that are so hard, as David Tepper just talked about, are the ones that you can actually make a lot of money on if you can time it correctly. You have to have a balanced portfolio. We've been saying this for a while. But I want to go back to what David Tepper did say. He said the market's rallied because we've had an enormous amount of stimulus. To put that into perspective, we have 38% of GDP in the U.S. going to stimulus, monetary and fiscal policy. And we're going to get more fiscal down the road, most likely. Put another way, M2, money supply, is up 14.5% year to date. That compares to 4% in 2008. So you do want to own risk assets when there's all this liquidity in the air. I mean, you just do. But you have to choose carefully. And I do say the barbell still works in my mind because I do think the reopenings are going to lead to a recovery of some sort. So you do want to have some cyclicals. You do want to have some banks, by the way. But you also have to have some of these growth stocks that are long-term secular winners.
But let me ask you about that. You do have to have some banks. Those are your words. Why? Why?
Yeah. Because I think there's value there. I understand the zero interest rate policy, and I know the challenge is there, but you have these stocks trading at 7-8 times earnings. And maybe those earnings have to come down because loan losses obviously have to go up, and that's not a surprise. I think a lot of the bad news is already factored. And if you believe in what I do in terms of the economy and seeing a gradual recovery, they will benefit as well. I do like the PayPals and the fintechs and the healthcare stocks of the world, and also the FANG names and technology. And now those are groups where I am overweight, but I do feel like these other stocks, they're just throwing them away. And they have a lot of leverage if we do see a recovery. And if you got to stay patient, you got to stay patient.
Pete, are you a buyer of stocks today, or do you think the market is pretty full? To use the words of Tepper, others are, giving their opinions too. But where do you come down, and what's your money talking today?
Sure. Well, when I listen to David Tepper, it makes a lot of sense. He's talking about risk reward, and where we are right now is the reward. There's a heck of a lot of risk for the reward where we are. So, one of the things that I've done for a long time, Scott, has been how do you actually trade your portfolio? And, Steph, I know, is a very aggressive trader as well. I probably am the most aggressive on the panel just because I do have so many different option roles that I play as well. So when I'm looking at this right now, what really stands out for me is I was looking at my positions coming into today. And at one point in time, I came back with you. I said I had the fewest number of option positions I've ever had. I think I was down to 6. And yet my stock positions were rising. And why is that? Because we had a lot of volatility. We had volatility anywhere between 50 and call it 85. So opportunities to buy stocks that are getting sold off and sell huge premiums against those. Well, I've been taking some of that off. So now if you look at my portfolio, you'll see that I've probably added, just in the last 3 or 4 days, I've probably added about 18 positions to my present positions I already had. Wow. So those are all on the option side of things, however, not on the stock side. As a matter of fact, I've gotten rid of a few stocks. So I think you just have to move around in the market that we're in right now, Scott. And you guys were talking about the risky stocks. Those are really the ones that I'm talking about in terms of Datadog and Twitter, and go through your various names of all these kind of crazy moves.
Those are ones your brother's
Twilio.
in. Are you telling your brother that?
Yes.
Because your brother's buying Datadog and he's buying other names too.
Yeah. Yep. And so am I. And those are on the option side because I have my list. My risk is limited. John's not buying those stocks. I guarantee you that. He's buying the options in those stocks. And that's what I've been doing. So I have a huge portfolio. Now, those have been running like crazy to the upside. Absolutely nuts runs. A lot of short covering, a lot of different reasons on why these names are moving to the upside. And I agree with David Tepper. They've probably gone way too far, way too fast. But that doesn't mean they aren't phenomenal trades. And you better be disciplined if you want to be on that side of the trade right now.